Good afternoon, everyone. Namaskar. Uh, Given that we are meeting for the first time in the new year, let me wish all of you a very, very happy 2024. As we move towards close of this financial year, it's always a great opportunity to be able to use this platform to engage with everyone, to share our progress as a company, how we are moving, where have we reached so far, and where are we going. So I really look forward to this opportunity to, interact with all of you who have taken time out to join this call, hear from you, share with you, and have a very open conversation in terms of the challenges and opportunities we are seeing in our chosen space of growth. Friends, as you know, at DiGiSPICE Technologies, we took some decisions at the start of this financial year. As some of you may be aware, over the last few years, we've been operating in multiple business segments. We had all called them out in two separate segments: Digital Technology Services and Financial Technology Services segment. Earlier this year, we took a decision to bring about focus in the company, and we said we will only focus on one segment, which is fintech. And that is why now you see that over the last 2 quarters, we've been basically talking through the progress on our fintech business. And this is a business that we want to grow going forward. So today, DiGiSPICE Technologies, from a business point of view, has become a pure fintech platform company. And I will talk you through some of the updates on the digital technology side as well. For us, friends, I think it's a great opportunity because, as many of you would have read in the papers this morning, the RBI has also commented on Aadhaar-enabled payment system, which is our core product, at Spice Money. And we really want to use this platform as an opportunity to share with you our thoughts on this segment, which we believe is fundamental to connecting rural India to the formal banking system. So let me start. If we could get to the presentation, let's start with the table of contents, please. So we will use this opportunity, as I told you, that at DiGiSPICE Technologies, we've become now a pure fintech platform company. So basically, we are going to be talking to you through on the key business update around Spice Money, which is our fintech platform business. Take you through step by step on all the key services that operate on our platform, talk you through some of the financial highlights of the business, and also the consolidated results of the company. So let me start by sharing with you some key highlights of Q3. What we have done here is use this as an opportunity to share with you the performance of the company over the last 9 months. This is basically with respect to what we are calling the continued operations. As I said, at the start of this financial year, we took a decision to exit the digital technology service segment, which was one of the 2 segments we were operating in. In the P&L and the financial statements that we share with you every quarter, we refer to this as discontinued operations. And we have a section of that in this presentation as well. But really, the results that you see here for the 9 months of this financial year compared to the last 9 months is for the continued operations, which is the focus of the company. If you see the numbers, one of the key metrics that we track is the gross transaction value of the customer transactions on our platform. We've seen for the 9 months, it has grown to 82,000 crores compared to 75,000 crores last year. So we see close to a 9% growth. This has translated into a growth in gross margin of the business. This is where we see our key income, what we refer to as gross margin, about 127 crores for the 9 months compared to 122 crores last year, 9 months, 4% growth. But more importantly, what we have seen in these 9 months compared to the previous 9 months is a growth in EBITDA and profit after tax. So both numbers are close to 8 crores, both in terms of EBITDA and PAT for the continued operations. So let me start by saying that, for us at DiGiSPICE Technologies, at the start of the year, the first decision we took was focus. we said we will focus on a business, which is the fintech platform business of Spice Money, and we will exit all other businesses. We started that journey at the start of the first quarter. Our goal is that by the end of this financial year, we should have completely exited the business of non-fintech. What we have seen in these 9 months is that the core payments business of the company, which comprises basically of three key products. One is Aadhaar-enabled payment system, second is cash management services, and third is Bharat Bill Payment System, referred to here as AEPS, CMS, and BBPS. This business continues to remain on a growth trajectory. We have seen 15% year-on-year growth in this business and about close to 1.5% quarter-on-quarter. Within these three product lines, we've seen how CMS and BBPS continues to show strong headroom, and we'll walk you through some of the key numbers and the underlying metrics on each of these product lines. AEPS business, however, has been facing strong headwinds in the last 9 months. There has been a lot of narrative in the ecosystem around the issue of frauds that has hit this space. And it is very important that as a responsible member of this ecosystem, we work closely with all the stakeholders to see how to reduce fraud. So there have been a lot of steps being taken in terms of two-factor authentication, which creates friction in transaction, but it's all with the intent to make sure that, as an industry, we reduce any concerns that come around frauds. AEPS is a very strong gateway to formal banking system for rural consumers and small businesses, and therefore it is our responsibility to work with the regulator and with NPCI to ensure that we put in the right checks and guardrails. As a company, we have over the last 9 months also been focusing on new business lines, particularly around banking and credit. And what is keeping us excited is the fact that the results that we've seen in the last 9 months shows us that there is an underlying demand for products that banks have to offer with respect to opening of current and savings account, as well as credit in the markets that we are present. To date, since we started, and we started about a year ago, we've opened close to 300,000, 3 lakh accounts, which have balances close to about 100 crores in them. And we've distributed close to 93,000 loans through our platform. So effectively, our core payments business continues to grow despite headwinds in the AEPS segment. And within that, we've seen growth, which we'll talk to you about. And on the new business lines, we are seeing that, there is strong demand on the ground. And as we are building the products for both banking and credit, we have lots of learnings on the back of which we are looking forward to these adding significantly to the growth going forward. Now, if you look at, our right to play in all of these areas, it is because of the merchant network that we have created across key markets in India. So if you move to the next slide, the customers of our platform, we refer to them as Spice Money Adhikaris. These are micro entrepreneurs, operating in semi-urban and rural India. And we've seen over the last now close to 5 years how we have onboarded more and more of the micro entrepreneurs onto our platform. So if you see from FY20 to now we are closing on FY24, over the last 5 years, we've seen numbers scale up from 241,000 merchants who operated on our platform to now close to 1.35 million merchants who are operating on our platform. Now, if you see this graph, you would see that, in the first 2 years, FY21 and FY22, we added more merchants, nearly 35,000 a month. And then between FY22 and FY23, that number came down to about 20,000 a month. And now this year, we've seen about 12,000 a month. This is because of what you see on the right-hand side, which is the graph of India. If you see over the last 5 years, we've built a very strong presence in the north and east of India, what is shown in dark. And this is a very dense network of merchants on the ground who are using our platform to deliver financial services to their communities. We've now reached over 2.4 lakh villages and close to 6,469 blocks. So there's a lot of coverage which has already been achieved. And if we look at financial inclusion, it's really the North and East that has been really wanting in terms of deep penetration of formal financial services. Of course, as we look at growing in banking and credit, we are equally excited about the South and West markets, and that is a growing opportunity that we're going to look at as we think about new product lines. So effectively for us, there's a certain amount of adequate coverage that we've already achieved in many markets in the North and East. And we're going to be looking at consolidating our presence in terms of focusing on, the merchants with whom we can now grow multiple products and services. So I think for us, we are excited about the fact that we have now a very good network in place, and we can work to see how we can now leverage this network to deliver on more products and services, which will translate into operating leverage in the financials of the company. I look forward to any questions that you have later in the Q&A session. But for now, I'll hand over to Sanjeev, who will walk us through some of the key business update and the service line updates, on the platform business, numbers for last quarter compared to the previous quarter and to the previous financial year. So over to you, Sanjeev.
Thank you, Dilip. Good morning, everyone, and thank you so much for joining in today. I genuinely look forward to this conversation of where we can exchange our strategy, business numbers, operational details, and more than happy to take any question that you might have at the end of the presentation. Can we zoom the slide, please? I'm carrying forward the conversation that Dilip just concluded on the network. The key business updates today are gross transaction, the GTV value that we measure, the customer gross transaction value, excuse me, that's grown 11% YOY from 24,900 crore to 27,600. In the same year, YOY, the service fee revenue grew 6% from 101 crores to 108 crores, and gross margin grew 11%, 37.7 to 42. So on a YOY, customer GTV grows 11%, service fee grows 6%, and our GM grows 11%. While on a quarterly basis, the customer GTV has grown 2%, but our service fee revenue has degrown 2%, and likewise, our GM has also degrown by 4%. What are the reasons for it? I'm going to talk about it in detail, but if I were to summarize, it's primarily because of the headwinds that we are facing on the APS business. So the degrowth is primarily because of two big reasons. One was APS, which is because of a degrowth in the APS business, which I'm going to cover in the next slide. Next few slides, we had a shortfall of 1.5 crore, nearly 1.4 crores. Second was subscription packs. So you will recall from the last few quarters, we've launched service rental subscription packs, which ring fences our top adhikaris. And again, given the headwinds on APS business, we had a shortfall on that business last quarter. And these are the two reasons for degrowth in our GM. However, collection business continues to scale, and the GM has again grown even on a quarterly basis. So overall, on a year-on-year basis, we continue to grow on a 10% average on GTV and GM, but on a quarterly basis, we've seen a degrowth primarily because of the APS headwinds. We'll cover that more in detail. Next slide, please. If you recall, over the last few quarters, I've been talking about one of the big objectives at Spice Money is how do we move out from just being a cash in, cash out business to multi-product business? Can we demonstrate that on this Adhikari network, we're able to offer more financial services products to consumers in emerging India? And again, staying on that piece, if you look at the graph again on YOY basis, last quarter, and that also at a larger GM. So on one side, we need to continue to grow our gross margin, and at a larger gross margin, can we continue to grow alternate business lines, additional business lines, to demonstrate that we are now diversifying from a cash and cash out to a multi-product. So what we were a 37.7 crore GM last quarter, we are 42 crores, and in that the cash and cash out percentage contribution from 76% has come down to 69%. This clearly demonstrates that the new business lines that we've set up have started to deliver, and they're contributing more than the cash and cash out. So the overall pie continues to grow, the share of new business lines continue to increase. Clearly, what's standing out is collections, which was a 6% contributor to GM last quarter, is contributing at 14% this quarter. Second was the rental packs that we introduced, subscription packs, which are now contributing to 6%. The other new business lines which we are building, which I'm going to talk about, banking and credit, we believe that they will demonstrate to increase more contribution to the GM in the next few quarters. Next slide, please. So now I'm going to cover on the 4 services that we are building, and we had spoken about it. One is our APS, which has been a hero product, the core business, which has given the right to play in this emerging India. Second is collections that we keep talking about, which is the next business line that we've grown. It's already showing considerable growth over the last 6 to 8 quarters now. And the 2 new business lines of banking and credit. So these 4 I'm going to touch, I'm going to talk more in detail. So the first is on APS. The first, I want to draw your attention to the first table on the industry. The office industry, which was 81,500 last year, same quarter time, has degrown to 78,942, which is a 3% degrowth. At a 3% YOY, Spice Money GTV has degrown by only 1.8%. Why is that so? Because our market share, which was 17.08% last quarter, is now at 17.31%. So on a degrowth industry on APS, Spice Money is holding its market share. It's actually increasing in market share, and hence at a GTV level, what was 13,917 in last year, is 13,663, which is a small degrowth, not as big as the overall industry. The question, how is this happening, is what I'm going to explain in the next 2 tables. So why is it that at a higher degrowth of the industry, Spice Money is able to increase its market share and hence hold on to this business and actually look to actually consolidate this market and grow further, is what we are seeing here. So the second table is about transactions. So if you look at the first row of transaction attempted, which tells you that last quarter, 9.1 crore transactions were attempted on a platform. Last year quarter, Q3 FY23. This year, quarter 3, 9.38, which tells you that the number of customers coming to our platform has only increased. And that actually brings a lot of comfort to us that Spice Money continues to be the chosen platform for APS business in emerging India. Now, what has happened is, while the customers continue to come, transactions have increased, but the success rate has gone down, which from a 5.6 or so of last quarter has come down to 5.6. And that's primarily because of limits that have been put by the issuer banks on the office business. And there also has been a surge on APS frauds, which is where regulator, NPCI, all banks have put in secure checks, which is a 2-factor authentication to limit frauds. And I think that's a very welcome step. And so such measures have actually led to a higher rejection and hence a lower success ratio. So the second table I'm summarizing is customers in emerging India continue to come to Spice Money platform. The next table, which is again very interesting and that will draw comfort on how we're looking at this business going forward, is when we break our SMEs into 3 categories: the large APS SMEs, which are contributing to about 50% of our overall GTV, the medium and small. When you go deeper in them, you realize that the large APS SMEs, that business has grown despite a degrowth in the EPS industry. So what they were contributed? They contributed 6,605 crores of GTV in Q3 FY23. They have grown. Their contribution has grown to 6,638 in Q3 FY24. This and I'm going to summarize this conversation slightly later. And when you go deeper, is the small EPS SMS GTV, where we've seen a considerable dip. So what they were contributing 1,597 crore in Q3 FY23, they have reduced to 1,431 crore. This tells us two things. First, the adhikaris who are serious in this business, who are committed to doing this business, are staying. Those who don't see this as an attractive business opportunity are moving out. Number one. Number two, the large contributing adhikaris continue to choose Spice Money. This shows that they're committed to this platform. This shows that they are wanting to grow with Spice Money. This shows that our platform is serving them well for the adhikaris who are committed to do financial services leading from EPS in emerging India. The second data point that I want to draw your attention is APS. When we look at our states, the geographical mapping, our APS GTV in the top 3 states has actually grown. So from 7,311 in Q3 last year, it's gone through 7,367. I'm saying this is again despite industry degrowth. This tells us that states where we have dense distribution were able to consolidate market. We're able to consolidate this business, and this business continues to grow despite the office industry stagnating or degrowing. However, when you look at the GTV in the remaining states, we're showing degrowth. This is also a learning for us and an opportunity, which means that we need to grow density. So when density goes beyond a certain threshold is when you start to consolidate the market. This is another finding that came out from our BCG project when we did an exercise with BCG on a strategy, and it is getting validated in the data that we are seeing. So what we see as key drivers of EPS business is number one, what we call platform stability. Second is what we call network density. So we have to have a minimum threshold of adhikaris in that network per population. And third is fraud controls. We have to be responsible players. We cannot have customers coming onto our platform, adhikaris using our platform, and customers or adhikaris being subjected to frauds. And this will play a significant role to stop this. Next slide, please. The second services I want to talk about is collection. In the collection, I want to break this into 2 categories. First, I will talk about agent collection, which we call CMS, and the next one is customer. We'll call that is BBPS. I'll talk about that in the next slide. When you look at here, collection business continues to grow over 50% on a YOY. This is the second business line which we started about 2.5 years, actually 3 years now, and over the last 2 years has significantly grown. We are live with 61 CMS partners, and now if you go deeper on this, you will, and I'm going to draw your attention to the slide, to this table below the graph, wherein if you look at the large CMS SMEs, which means SMEs doing greater, adhikaris doing greater than 30 lakhs of collection business in a quarter. That was 2,616 of them in Q3 last year. It's grown to 3,574. So that's been a 37% growth in the number of large counters, adhikaris doing collection business, CMS business. And needless to say, the GTV growth has been higher, from 4,000 crore to 6,716, which is a 67 crore. What is and why is this happening? Actually, there are 2 reasons that's happening. One is, as you grow partners, so our enterprises, which grew from 55 last quarter, FY3 is going to 61. What happens, it takes about 1 to 2 quarters for us to significantly take a share of the enterprise collection. And that's exactly what we are seeing here. So, and we're seeing it reflecting in the numbers over a quarter or 2. That means per enterprise, we're now able to demonstrate that we're able to demonstrate more business. That's the first key sign of growth here, and that's the opportunity for us. Can I extract more business per enterprise? Number one, we have 61 CMS partners. Can we increase the number of CMS partners? Answer is yes. We will continue to work on that. And third, which is today a 3,574 large CMS SMAs. Can this number grow more? Answer is yes. This number can significantly grow more. So these are the three, again, big driving levers for us to grow the agent collection business, what I call CMS. Next, please. Again, one of my favorite slides. This is what we call consumer collections. Now, this is a very, very interesting slide, and I want to draw your attention here. This business, again, on a YOY basis, has grown from 871 crore to 1,096, which is a 75% growth. What is far more interesting here is something, again, I'm going to talk about in the table that's below the graph. Let me also articulate BBPS, what we call the two big categories here. Obviously, the first big category is the loan repayment. So this is EMI paid by MFI consumers and NBFC consumers onto our platform through BBPS. So they're walking up to an adhikari and paying their EMIs. The other categories on BBPS primarily is electricity bills and other utility bills. So this is the category. I just want to bifurcate the bill payment here. When you look at the table below, you'll see that the number of consumers coming to our platform to give their bills, which was 9.6 lakhs in Q3, is 19.6 lakhs in Q3 FY24. So on a YOY basis, this is a 2x. So the total transacting consumer base walking up to an adhikari, our adhikaris, to pay their EMI bills or utility payments has doubled. The most interesting is the second line. Is how many of them are coming back again? Or was it just a one-time exercise? 5.48 lakhs was a repeat customers in Q3 last year. This Q3, it is 13.89, which means the repeat customer is growing at a faster rate, 2.5 times. What does this show? This demonstrates to us that this consumer has a relationship, respect, understands this adhikari. He trusts this adhikari. He knows that there is an adhikari point where I can, I can go and deposit my EMI collections. I can pay my bills. So it is now started to attract a consumer relationship on my adhikari network. What is unfolding is a customer relationship, a customer engagement at my adhikari point. And which kind of customers are these? These are customers who've taken loans. The customers who are paying an average ticket size of 1,700 rupees. So it also gives you a segment of consumers that we started to attract. They're just not Aadhaar-oriented who are withdrawing money. And for us, the opportunity is then, over a period of time, is this a consumer base that we want to cross-sell other products like savings, deposits, even credit? So here the big growth is, today we have 135 lenders. There will be more billers. We continue to grow billers. BBPS is continuing to add more and more lenders. We'll continue to do that. Second is have more density, have more adhikaris activated on this, have more places where consumers can reach out. Can I reach out to our adhikari network? We want to work on that more. And hence, that will lead, in our opinion, our data says that it's an organic repetition of consumers coming back to our adhikari again and again. Next slide, please. Now I'm going to talk about the two new business lines that we've been building. First is the banking. So you will recall last year, same quarter is when we had launched banking. Our relationship with Axis Bank, when we started to distribute CASA. That quarter, we did 64,518. That number, this quarter, we've done 2,56,620 savings account. Current account, likewise, 230 has got scaled up to 16,465. Now, this is clearly showing an opportunity of growth for us. And over the last 1 year, we've taken a lot of steps to work with Axis Bank, and second is to onboard another payments bank, which is NSDL. So with now Axis and NSDL, we believe we're sitting on another opportunity to scale banking in emerging India. Roughly, this 3 lakh accounts today have a float of nearly 100 crores, 98 crore to be precise. And if you look at the average balance, in our opinion, it's a very healthy balance to start with. We're very confident that this balance will actually increase with time and with vintage. The other interesting data point here is that since you start a new business line, it takes time for adhikaris to start adopting a new business line. And here again, about the number of adhikaris who opened more than 5 accounts has from 2,754 has now become 10,000. So there are 10,117, 10,100 adhikaris who opened more than 5 accounts. That means there is a segment of adhikaris who have started to understand offering banking to the consumers in their community. And we believe that this number will only increase. So what is our focus here? One is we have now two bank tie-ups. One is a payment bank, one is a very large private sector bank. We continue to work with both of them. So today we have 37,000 adhikaris who are live on CASA. Can we increase this? We have headrooms to grow here. With headrooms, we believe that the number of adhikaris who will take this up as a significant new business line will increase. Today they have 10,000 adhikaris who open 5 accounts. We believe that this number will increase. And as we increase, the balances will increase. And with balances, the opportunity for us to get more consumers onto our platform and hence offer more cross-sell products like even deposits will increase. Next slide, please. On credit, again, a business line that we scaled up over the last 12 months. We've disbursed about 93,000 loans, over 250 crores till date. 2,407 was the number of adhikari and Grahak loans that we disbursed last year, same quarter. That's 22,400 this quarter, this year. It's 8 times. 7.9 crore was the value of disbursement last quarter. It's 30.5 crore this quarter. Is there headroom for growth? Answer is yes, there is headroom to grow. Again, a new business line. It will take some time for us to grow, but we are seeing a very, very strong affinity of our own adhikari to do this business and and consumers walking up to adhikaris for this business. We're working a lot on getting lenders on our platform. We're working a lot on customizing products. This is rural India. You have to have the right product set. What will work in Mumbai and Delhi might not be the right product that will work in emerging India. Hence, customization of products is very important. And how do you offer them? How do you make an adhikari seamlessly offer, like just an APS transaction or a CASA account opening? Credit products in rural India will be key. And these are the 2-3 big building blocks that we work on as we scale up the credit business. I'm going to hand over to Sunil to take us through the financials. I'm more than happy to take any comments and questions post the financial highlights. Sunil, over to you, please.
Hi, good afternoon, everyone. This slide contains about the Spice Money financial highlights with respect to the standalone company where the fintech business is lying. And if we see that we have grown quarter on quarter in terms of the customer GTV by 2%, and the year-on-year growth quarter on quarter is 11%, and 9% growth is for the 9 months ended. and consequently, there is a little bit dip on the service fee revenue quarter on quarter, but on year basis, it has grown by 6%. And the gross margin, which we little bit headwinds on the APS side, which we had explained in the earlier slide, that has caused reduction in the gross margin, which we see that that will be have an impact in the JFM quarter also, but we understand that will get stabilized in this quarter because there's a change of how to do the transactions on the ground or on the platform with the 2FA introduction. And on the indirect cost sides, we have done some operational efficiency with respect to that indirect cost from the last year, same quarter has come down by 2 crores. So in result of that, EBITDA is 4.3 crores against the 5.6 crores. And if we see the 9 months period and year on year, there's a significant growth in the EBITDA. And on the EBIT side, which is flowing straight to the from EBITDA to EBIT, 8.7 crores against the 10.1 crores. And on the PAT side, this is a better PAT due to the consultant cost was in the previous quarter. That's why that was an exceptional item, and that's why the PAT has improved in comparison to the EBIT, lower EBIT from the previous quarter. And if we see on the 9 months ended, the EBIT has from negative to 25 crores, which is a overall impact on our financials and growth prospects, and consequently the PAT has also from negative 1.7 crores to 7.1 crores. Next slide, please. This slide contains about the consolidated financial summary for the continued business, and it consists of what the in the previous slide I have explained about the Spice Money numbers as a standalone, and the second category is with respect to others. So on the other segment, we were having a one-time higher income in the previous quarter of 2.7 crores by due to which there was better EBIT and PAT. So that's why if we remove that impact, so will we PAT neutral with respect to the overall results. We can move to the next slide, please. This slide represents about the discontinued operations in summary form, where we can see that overall profit before tax on this business is reducing sharply, even considering the one-time items also. So there's a 5.3 crores from 21.1 crores in Q1. And we expect that in this quarter, JFM quarter, we will be having only the expense on the side of closure of the companies where this business lies, and because it has a foreign operations also, foreign companies also. So we are in the process of closing those companies. And going forward, it will be in the range of kind of 1.5 crores only with respect to the closure of the business and legal and professional expenses. That's all from my side. Thank you. Amit.
Yeah. So, thank you everyone for an excellent and very detailed kind of a presentation. We'll wait for some time while the question queue assembles. Now the floor is open for the participants to ask questions. We'll wait for a moment while the question queue assembles. Yeah, so we can begin with Prateek Chaudhary. Prateek, over to you. You can ask your question now.
Am I audible, sir?
Yes, you are.
Sir, on the AEPS side, whatever has been happening in the industry, which has led to the RBI putting in more checks and balances. Do we, where do we see? I mean, is there a possibility that consolidation will take place from here on, and maybe the smaller players, will close down or will get acquired, or how and consequently, how do you see our market share increasing?
So, Prateek, if I can take that, can you hear me, Prateek?
Yes,
Hello?
sir, you are audible.
So I think, Prateek, we clearly see that, this industry is going to get consolidated. I think, we definitely view the fact that lots of players who entered the space, through, tying up with banks to, start the AEPS service, will have to look into their processes and systems, and RBI will surely set in certain guidelines, which all the AEPS service providers will have to comply with. So we believe that a combination of, the impact that we are seeing on the ground where, there is, people who do this business as their core business, which is what we call the large adhikaris on AEPS, they are growing. So basically, there'll be a consolidation at that level. Second, we are seeing that, players who have, more presence on the ground and a scale network, will do better in terms of economics. And I think more importantly, to your point, Prateek, that, RBI setting in certain guidelines, which will call for, certain changes in the way players have been onboarding, merchants on their platform and following certain guidelines. That in itself will create a situation where lots of smaller players may find it difficult. So we do see a situation where there would be a certain level of consolidation in this space.
And to what extent do we see our market share increasing? And also before that, these smaller players, what would be their percentage contribution in the industry or market share?
Well, it's a very long tail if it's fragmented at certain level. Of course, there are few players like us and others who have a double-digit market share, but it is a long tail, Prateek. So consolidation will happen. I think for us, as we showed in the presentation, we are very strong in certain states. So of course, we will protect and grow that share. But there is an opportunity for us to enter new markets and also on the strength of our platform and brand, get market share from smaller players there as well. So I think it's going to be a state-by-state market share growth story. At an all-India level, we have a market share of close to 17%. But on a state-by-state level, as we build network density, we will be able to add to our market share in that state and therefore to the overall industry. I feel like, like we see UPI, where you have few large players who are, dominating the space. There is no reason why the same cannot apply to AEPS, which also serves as UPI for rural India.
Right. And we had onboarded Boston Consulting Group in the last year, and there have been a number of new initiatives or new developments that have taken place post that. One is the guarantee yatra that I see on your LinkedIn page, where a number of your senior management have been putting up. So what is this guarantee yatra about? And also, if you can tie up what have been our learnings or from Boston Consulting's exercise, and where are we sort of seeing our company transition or take benefit from those learnings?
Yeah. Before I bring Sanjeev in on this point, Prateek, since you mentioned about Guarantee Yatra, for us, I think, our vision for this business is a much longer term vision in terms of building out a very strong last mile delivery network of formal financial and banking services to emerging India. So this Yatra was more around, going to nearly 22 cities and meeting up with our distribution partners on the ground, and kind of updating them on the developments in the space, talking to them around the new products that we want our adhikaris to be trained on, talking to them about, other compliance and KYC norms that we want our adhikaris to be followed. And therefore, a lot of this was about engagement, education, and also really effectively talking about the opportunity in terms of business growth. So the guarantee was more around that, we believe that if our distribution partners can work with us on the ground to deepen our presence in some of the key geographies, we believe that there is a strong possibility for them to earn significant income from this business. So the guarantee was more around, a two-way, promise where, they guarantee us that they will ensure, healthy, network on the ground, and we will ensure that we will keep bringing in products that can add to their income and the income of the adhikaris on the ground. So it was an engagement process, a very deep engagement process, and we learned a lot on that on the ground. On BCG, one of the main points they did talk about in our analysis with them was around network density. And that is also something that we touched upon in this Yatra along with our distribution partners. But maybe I'll let Sanjeev, talk more about our engagement with BCG and how that has benefited us in our thinking about the way forward. Sanjeev?
Sure. Thank you. So, Prateek, a purpose of engaging BCG was again to, narrow down on what we need to do, how we need to be a more efficient organization, right, in our overall strategy. And I think it is clearly laid out few tasks set out for us on how we work on one, let's say, a few key building blocks like density, like a very, very important organized playbook of how we engage them early when you onboard them, and how do you remain engagement? How do you engage with them over a period of time? In terms of breaking them into different categories and you keep engaged with them. So these are playbooks that we've designed with them, and I think that what we're trying to execute is a very focused strategy, right, in a very measured way, and that's clearly reflected. So that's the larger piece there. Second was, BCG also helped us to identify the adjacent revenue opportunities, right? So, for example, in different markets of the country, how they've broken them down into potential on credit, potential on savings, right, potential on even commerce. On basis of these, they've given us pin codes where the opportunity exists. And then they very clearly told us that these are the areas that where we should focus on building a network. So I think the larger point I will say is two. One is have a very focused strategy for execution to generate more and more operating leverage. Can we build a better, more efficient organization? And second is, what are the new business lines that we should chase and where? And these are the two big ones that we've taken out.
Okay. And there was an announcement a couple of months back where we tied up with Wibmo, which is a PayU company. What are the developments on that front?
So Prateek, we have a PPI license. We are a PPI license holder. And we believe that there is an opportunity for the cash consumer to go digital in emerging India. Can we be a network that can we onboard them early and make them digital? That is the opportunity we're seeing, and for that, we've partnered with Wibmo to build the product with us.
Okay, sir. And just last question. The losses you're saying it will not continue materially going forward from the discontinued operations.
So
Hello.
No, we heard you, Pratik. Sunil, you want to answer that question? Pratik is asking on discontinued.
Sorry, can you repeat your question, please?
You commented on the losses from discontinued business. So, will March quarter, will it be the last quarter where we'll be seeing these losses?
Effectively, yes. And going forward, only there will be an expense to kind of closure of those companies where this business was existing. So, in quick response, that's by 31st March, we will be closing the operations fully, and only the closure of the companies will have expenses with respect to legal and professions, what I commented about, which will not be kind of say 30-40 lakhs per month to just closure those companies from legal and professional expenses.
Okay. And I was going through the LinkedIn page. There have been a number of very key people from very experienced backgrounds that have joined our company. So if you could tell more about the same, how are we transitioning in terms of building a very strong organization?
So, Pratik, once we took a decision that as DiGiSPICE Technologies, we will focus on the fintech segment and especially fintech for emerging India. I think both at a management team level and at board level, we've been, bringing on the team a lot of experience and wisdom around, growth in this space. As you would have seen, we've brought in senior professionals both in operations as well as in product and technology, as well as in legal and compliance. And even at a board level, we've brought in people who've worked with some of the largest banks in India, when it comes to financial inclusion, as well as, worked significantly in rural banking. So both a combination of technology and experience in the banking domain, because we do believe that fintech is two words, fin and tech. And so at the end of the day, we need experience of both financial services and technology. So how we leverage technology without compromising how do you run a sound, robust financial services business, which has to work with guardrails. So I think that is helping us, and hopefully, you'll hear from some of these team members as we go forward. Sanjeev, you would like to add to that?
No, Dilip, I think you covered it.
Yeah. Thanks, Pratik.
Okay, sir. Thank you. I'll get back in the queue.
Thanks, Pratik. Before we proceed to the next question, one request. Anybody who wishes to ask a question can either raise a hand or type their question in the chat box. Thank you. Next question comes from Harshit, who has a written question. What is your outlook on the fintech business with respect to the RBI guidelines which have come in? So if you can talk a little bit about that, sir, differently.
I think, the regulator is really has been encouraging for the fintech sector to grow in partnership with the banks. In fact, they have been very keen that banks and fintechs work closely together. A lot of the narrative has been around guardrails. And I think, in that context, there's also been discussion around setting up SROs or self-regulatory bodies, which fintechs are part of. And therefore, there can be certain guidelines which the fintech industry can apply to themselves in terms of self-regulation, so that it doesn't come in the way of innovation. But I think overall, directionally, our experience has been that the regulator is very positive on growth and inclusion and innovation, and but very clear around the right guardrails. So I think there's a lot of emphasis on self-regulation, and so therefore going forward, I think the onus is on the fintech industry to be able to self-regulate itself in terms of building guardrails which can allow for sustained robust growth.
Thank you, Dilip. Another question from the chat box comes from Urvija Shah. What is our KYC process in terms of compliance with respect to RBI guidelines and also role of a adhikari?
Sanjeev?
So we follow the necessary guidelines, right? For onboarding any adhikari. There is a KYC process that has been defined by the banks, and we follow that completely. Indeed, actually, we go few steps further and have taken for few more, measures from our side to ensure the identity of the adhikari, the genuinity of the shop from where he's doing business, right? And there are certain, again, rails that we've put on transaction monitoring area that he operates, all of that, to ensure that we are able to comply from know your consumer from a more in the spirit basis rather than just taking few documents. So the role of adhikari, obviously here, I mean, the KYC is done on the adhikari. The role of adhikari, like we just spoke in our entire business, is he's using our app, the Spice Money Adhikari app, to deliver all the financial services to consumers who are walking up to the adhikari to avail them.
Yeah, Sanjeev, can take the next question now.
Yeah, please.
Yeah. Next question also comes from the chat box from Preetam Bajaj. So the recent event has actually is a guiding force behind several questions of same nature. What kind of impact can you see on DigiSPICE business after RBI took the action on PTM recently?
You see, for us, it's only what we read in the media about, what's happening, in this space on this company. I think for us, we are continuing to focus on our business model and on our journey, which we outlined. I think for us, we want to continue to scale as an assisted platform business on the ground. I think it's very clearly recognized that AEPS will serve as the UPI for rural India, where we will use the AEPS rails to connect small businesses and consumers in emerging India to the formal banking system. So we will continue to keep our focus on that. And as Sanjeev said, continue to build on the adjacencies, around products around savings and credit. So I think for us, we have a very clear roadmap ahead of us, and we will continue to, go down that roadmap. Of course, such events, gives us an opportunity to also introspect and see that, what are some of the, as you scale, what are some of the challenges one faces in terms of making sure that, we have the right processes, especially around compliance and guardrails. So, we will definitely ensure that we look internally to make sure that, we are able to keep those in mind as we scale. But effectively, we are very focused on our roadmap, and we'll continue down that path.
Thank you, Dilip. The next question comes from Shamanand, again from the chat box. What are company's plans on wallet-driven business and NBFC license? Also, what is the future of this industry? And next few years, if the management can spell out, how does the management sees the opportunities and growth potential for the company?
So I think, maybe I'll get Sanjeev and Sunil to also come in, but effectively, like Sanjeev said, we do have a PPI license. It's up for a renewal, but, we are hoping that the regulator will renew it, but it's up for renewal. So, the wallet license does allow us to talk about digitizing cash. It's a product that, has been in the market for a long time, but with the interoperability with UPI, suddenly a lot of use cases open up. It also allows small ticket transactions to move from the CBS platform of the bank to the wallet system. So therefore, there is an opportunity to build use cases. I think the NBFC, directionally lending is a big opportunity. There is a need for capital that small businesses need to grow in emerging India. We do have significant number of small businesses operating on our platform looking for capital. And given that we have digital access to them and data and ability to build customized products for them, there is an opportunity for us to do lending. We do believe that NBFC allows you to put in place a lot more systems and also get access to data, because you then get regulated and it allows us to do more. So we are seriously looking at the opportunity to get into that space. As of now, we operate more as an LSP, a loan service provider, as a platform. But we are keeping in mind the opportunity on the ground, seriously evaluating how to think about the NBFC license as an opportunity, and we will come back to you once we've decided to take any formal steps in that direction.
Thank you, Dilip. There is Prateek Chaudhary for a follow-up. Concall, can you open the microphone for Prateek, please?
So when is the license up for renewal? Which month?
30th June.
June this year, June 24.
Okay, and in your experience or knowledge, have other licenses been renewed for other competitors of ours?
Yes.
So it's a normal process.
It's a normal routine process.
Yeah.
Okay, and also taking cue from the previous participant, what sort of growth we could see in the major focus verticals we are targeting, in FY25 or FY26? Where do we see our organization going in terms of the total income beyond?
Sorry.
Yeah, Sanjeev, go ahead.
So, Prateek, I don't want to hazard a guess on a number, but I think like we spoke on the 4 service lines, right? There are different stages. On EPS, like we said, I think the opportunity is very clear of consolidation. There are a few players who will stay, right? Can we take a lead there? One. On collections, we see definitely a lot of headroom to grow, and we'll continue to build that. Savings and credit just started. So I think, we just started there. So again, those are businesses that should scale. So I think on all 4 business lines, we are very, 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 very bullish. And we should continue to grow over the next few years.
Yeah.
Sir, on the percentage contribution, like AEPS is almost 70% of our income. Do you see, to what extent do you see AEPS, reducing over the next 2 years in percentage contribution, and say And the corollary to that question is, to what extent do you see banking and credit increase in percentage terms, which are only 1% each right now?
So I'll tell you, I'll give you an answer to that. I think I called this out about 2-3 quarters ago. Is that cash in cash out, which was obviously larger, cash in cash out, which was a larger percentage, over 90% earlier. Our first goal was one at a much higher gross margin. Can we bring that to 50%? Which means not that that business numbers will go down, but other business lines should increase at a faster pace. I think that is the opportunity. So that is the opportunity, Prateek, we will see on all business lines. EPS also, again, I continue to say, continues to be a hero product, and at least for the next few years that we see, we definitely see it as a major contributor. And on the back of it, we see the other business lines contributing more to increase the overall pie.
What would be the margin difference between, say, AEPS and banking and credit?
Sunil, you want to talk that?
So, as we mentioned it out that we are for the credit piece, for the lending, we are a LSP. We are and margins is on the kind of a referral and collection support. And these are the for the APS and CMS standpoint of view, these are the transactional business where our gross margin is kind of fixed in terms of percentage. So I would say that with the product mix getting changed, our dependence on the APS and cash in product will go down, what Sanjeev has mentioned. So from gross margin proportion standpoint of view, this will be, we look forward that we can reach out to a kind of a 50% share with respect to other products in the coming 1 to 2 years.
So Prateek, if you look at building on Sunil's point, you see the graph on the take rate that we have, which is close to 40 basis points. As Sunil mentioned, as we move towards more products compared to product-led revenue compared to transaction-led revenue, the overall take rates will move up, right? As the share of those products revenue grows. So we will move anywhere between, 40 bips will grow as the overall pie grows in that space, because we are moving towards higher margin products.
Great, sir. That was really helpful. Thanks a lot.
Thank you.
Thank you, Prateek. One last reminder to participants. In case there is any question, you can raise your hand or type your question in the query box. Participants, in case of any queries, kindly raise your hand or type your question in the query box, please. I think Prateek's hand is still raised. Concall, can you open the mic for Prateek, please? Prateek?
So how do we see the, there's a Airtel Payments Bank. I mean, in terms of our competitors, there are a number of private companies. There's an Airtel Payments Bank. There is someone like India Post, NSDL. And then there are players like BLS e-Services, which is got listed. Each, having I mean, it's difficult to comprehend all of it into one. But if you could briefly tell about what is our differentiation with respect to these players, and in terms of our reach, in terms of our current products and future roadmap, how will we be differentiating, and what are our strengths or weaknesses as against these players?
Yeah, Prateek, let me first talk about. Uh, I think the two categories of players you mentioned. One is you mentioned about payment banks, the three payment banks that you mentioned, and the second one you mentioned about a corporate BC model, right? For us, Prateek, we are neither, right? We are neither a payment bank nor we are a pure corporate BC. And so, while we, definitely have our adhikaris who are also retailers for some of the payment banks, our business model and our focus on which lines of business to focus on is very different. We see ourselves as a platform business, unlike a payment bank or a corporate BC. And directionally, we focus more in terms of, building our network where we are sitting between consumers, small businesses, and formal financial institutions like banks, NBFCs, and others. And so, as a platform player, while there are cross points with the payment banks, effectively, we are also partnering with them, to enable distribution of their products and services. As far as corporate BCs are concerned, these are pure corporate BCs. We are not at all a pure corporate BC. Our participation, to be able to deliver these services is through a BC model, but we are not a pure corporate BC model. So our approach is very different. Our business model is very different. For us to enable some of these services, we have to participate as a BC, but we are not a pure corporate BC. So very clearly, we see ourselves as a platform business that's enabling, formal access to formal financial services to small business and consumers in semi-urban and rural India. And we will continue to scale as a platform business.
And on the say the MSME part, or like you also mentioned that you might there's an NBFC plan as well. So in the pin codes that you operate, what is the size of opportunity available in terms of the credit which will be given out to, say, MSMEs? I mean, is that so? Will we be focusing on retail more? And retail, obviously, because in rural areas, the ticket sizes would be very less. So, what I mean
So if you look at the lending opportunity, Prateek, very clearly there's a strong MSME lending opportunity for us in the market we are present. And effectively, if you look at our adhikaris, they are MSMEs themselves. In fact, they are more micro than small and medium. So the first part of the MSME, the first M, which is micro, is really the adhikaris we already have on our platform. So Prateek, the biggest opportunity we have is to first lend to them. And this is a significant base. They've been transacting with us for a long time. We have data around them. We have access. And therefore, when we think about building a robust lending business, our first right to play is by lending to our own adhikari base. And I think that's what we're going to focus on going forward. And I think this has significant headroom, both in terms of secured and unsecured lending products. And therefore, our ability to provide them capital on terms that are better, and more importantly, provide them more customized products, which is what perhaps is lacking in the ecosystem. And the fact that we have digital access to them enable us to do it at unit economics, that work for them. So I think for us, that's the really low-hanging fruit when it comes to starting to think about building out the lending business.
And how big would just the adhikari themselves, and in terms of whatever business they do, and the larger ones that do the largest ones on your platform that contribute majorly to your income, what sort of AUM ballpark you can roughly estimate that the adhikari themselves would need in terms of credit requirements?
So Prateek, I really want us to come back to you with more concrete plans on our lending business. But I think just to give you a sense, we have looked at credit score data of our adhikaris. In fact, we have a product on our Adhikari platform, which is Check Your Score. And many of our Adhikaris have used the product to check their score, and it allows us to understand a lot about which are the existing to credit and new to credit Adhikaris. All I can tell you is that we believe that there's an opportunity to build a sizable AUM business on the back of lending to Adhikaris, and that's why we are seriously evaluating the NBFC option.
And these adhikaris, as you said, that they also do retail for some of the payment banks. So in terms of the major ones that you have, ones that are contributing majorly to you, the adhikaris, in terms of their own income profile or their own earnings from their business, do you see that? I mean, is this the case that Spice Money is contributing majorly to their revenues and profits, or is it that they are, sort of equally being tied up with products and services from other payment banks or other entities?
I think if I specifically talk about the payment banks, Prateek, their focus continues to be on account opening and building up balances in accounts. We as a market, as a platform business, are focused on plethora of financial products. And so by definition, I believe that, we have one advantage where we can bring more products to the table, because as a platform business, our focus is on number of transactions and fee income. So we have more to offer to that Adhikari, which we believe will lead to more wallet share of the Adhikari compared to, in your example case, just purely a payment bank, which is more focused on opening of accounts and balances, while our presentation, as you saw, is creating more products for that Adhikari, and even going forward in the credit distribution space, more products. So I think directionally we will look forward to offering the Adhikaris more products and opportunity to earn more income. And I think the Adhikari will really skew their wallet share more in terms of who can enable them to grow income more. And if we can create that, like one of the slides that Sanjeev took us through was on EMI loan repayment, where we are seeing significant repeat behavior. And this is traffic that we are bringing to the Adhikari of customers coming and repeatedly, repaying their loans, which is a source of earning for the Adhikari. So as we bring them both a new and repeat customers and more products, I think, they will see a significant earning opportunity to grow. So our challenge, Prateek, is to keep making sure that we can help them earn more. And if we can make them earn more compared to what they earn from other partners, we will be able to increase our wallet share of theirs.
So are these
Prateek,
other
I'm sorry.
players?
Prateek, I'm sorry. I'm just interrupting you. If you can conclude your turn of the question with one last question, please.
Yeah. So there's one last question. It has two subparts. One is that are these competitors also sort of converting their services and giving it out as a platform? And second, there was this recent interview where one of the MDs of payment banks said that they are lobbying the RBI to probably allow payment banks to also lend. If that were to happen, how would it, potentially change our potential or whatever we want to do in the credit space?
I think, Prateek, we don't know how the regulation would evolve. But yes, there is this talk about, improving viability of the payment banks by enabling, and this is a narrative or a discussion happening between the banks and the regulator. We'll have to wait to see what happens. But, for us as a platform play, we are already working on in the credit space. So, we continue to gather a lot of data, and credit is a business that, you need to do step by step. It's not a business you can just rush into. And therefore, we are also trying to figure out, how to think about, customer cohorts, underwriting models, and all of that. I think the switch between payments business and lending business is not as automatic A lending business is a different business to a payments business, and you need to build the requisite capabilities to do a successful lending business. And, for us, we are already, building some of the key building blocks around this. So I think to your point, will they function as a platform? Yes, to a large extent. They also offer CMS as a service. They also offer APS as a service. So they will look at those income streams as well. But as a payment bank, their focus continues to be on accounts and balances. And I think, for us, it's more a matter of, being able to do more with the adhikaris with respect to products on our platform.
Okay.
Thank you, Dilip, and thank you, Prateek.
Thanks a lot, sir. Thank you so much.
We have 2 questions from the chat box.
I think we have one question of Preetham. Any future plans of payment bank license?
Yeah.
No,
Sorry.
no, we have no such plans.
Okay, thank you, sir. One last question from Pradeep Chaudhary. Do we have matrix on how many customers enjoying Manrega are our customers?
So we don't have right now, Prateek. In case you would want, we'll try and see if we can take it out and share that with you.
Thank you, Sanjeev. Before we end the call, one last request to all participants. In case of any question, you may please raise your hand or type your question on the chat box. I think that was the last question from the participant side. If I may hand over the call to Mr. Dilip now for his closing remark. So over to you now.
Thank you, Amit. Thank you, everyone, for taking out the time to come and listen into our presentation as well as participate in the conversation. This is a journey that we are on. It's a journey that we are taking very carefully and thinking through every step. We are hoping that as we go step by step, as I said, we've started by saying, let's bring focus. So let's focus on fintech. That was the first part of the journey decision that we took. Second is, how do we simplify? So like Sunil said, we have many companies in the structure that we need to shut down and close, so simplify the corporate structure. And third is focusing on building a robust growth model for the company. And that is where, Sanjeev and Sunil walked us through in terms of how we are looking at the business product by product. I think overall, what continues to excite us is the opportunity that emerging India presents. I think if, we have to build a developed nation, I think, billion consumers that live in semi-urban and rural India have to participate in the development story of India. And financial services is the bedrock of economic growth of any nation. And so if the emerging Bharat has to grow, financial services penetration in emerging Bharat have to increase. And we believe that at Spice Money, we are building one such platform to enable access to formal banking and financial services to small businesses and consumers in emerging India. So this is a long-term journey, but a journey that we are committed to. And we hope that we'll continue to get your support, guidance, inputs as we go forward on this journey. Thank you so much once again. Namaskar. Thank you.
Thank you, everyone. You may now exit the call. Thank you.